What would you tell people who are new to this space, recently got into Bitcoin? Now they're probably facing their first bear market. What would you tell them at this point?
If you want to be active in the space, build something of value. The industry is about building products and services that people actually need.
Yeah.
If you're not doing that, then maybe reconsider your membership in the space.
Welcome to a special edition of Okcoin Live. We have a very special guest here today, Nic Carter, who is the GP of Castle Island Ventures and also co-founder of Coinmetrics. We are here at Oslo at Freedom Forum, so great to have you, Nic.
Thrilled to be here. Thank you.
Awesome. Since we are here and we have a lot of topics around Bitcoin, so the first question I actually want to ask you is, what does Bitcoin mean to you?
Well, I just think it's the most potent monetary system ever devised, and it's something that gives hundreds of millions of people globally the ability to really have autonomy over their savings and in a way that wasn't possible before. And so here at the Freedom Forum, I'm hearing from all these human rights activists that are actually genuinely employing Bitcoin as they fund protests, as they organize against authoritarian governments. I mean, I'm hearing these stories very directly, and it's not just the promise of these ideas, it's the realization.
There are
real use cases. Yeah, I mean, it's remarkable. I mean, I thought I was sort of up to date on all that stuff, but then, just this morning I heard from a dozen human rights activists that have actual case studies where they have deployed the stuff at scale. They don't care about, monetary policy. They just care about getting, financial resources into the hands of people who matter and who need it and have no alternative.
Yeah.
And so, I sort of thought I was, inspired by Bitcoin, but that just sent the whole thing into overdrive. I mean, it's really, really remarkable.
Yeah.
And I think as a community, we should probably be surfacing more of these stories.
Yeah, absolutely. It is definitely a real use case where there is an alternative to the current system that is not in control of any central entities.
Yeah, and the incredible thing is just meeting these organizers that, they don't consider themselves technologists. They don't, they're not attracted by the sort of the promise of the technology or anything like that. It's just about the practical reality of getting money in and out of places where there's no other way to do it.
Yeah.
And holding it in a way that's unseizable, that's resistant to expropriation, seizures. That's exciting because, Bitcoin usage has kind of been like subsidized by virtue of the fact that it was all enthusiasts historically. So it wasn't, organic per se. Now you have, this exogenous group that they just care about Bitcoin for its actual utility, which is very cool.
Yeah. What are the things in Bitcoin? Because I think a lot of people see different things in it, see different qualities. What is the most underestimated quality that you think will play out over the next few years?
Oof. You mean sort of like technologically, like
whatever,
BIP or something?
Whatever dimension.
So I don't know if any of it's underrated because Bitcoiners, also tend to hype things up a little bit. So you could say it's all sort of correctly rated.
Or put in another way, that has not achieved enough consensus yet, but will develop more.
I have a few things. So one, I think proof of reserves it has made great strides in the last year. So basically the ability of a custodial deposit-taking institution to prove to third parties that they have the funds, that they have reserves equivalent to the outstanding liabilities. We see it in a stablecoin context. We see it with custodial exchanges. BitMEX launched theirs, Kraken launched theirs, a number of other issuers have launched proof of reserves. That continues to be an underrated thing. Actually, I will say that's 100% underrated. I might be one of the only people that sort of like really rates it.
Why that is the case? And that's a comment not just on Bitcoin, but on the overall crypto system, right?
Because exchanges haven't been competing on the basis of credibility acquisition. They compete more on the basis of listings or financial products, and liquidity and things like that. So now maybe as we enter a more quiet phase, the exchanges will have to do their best to win user trust and things like that. And so, I think maybe it could change. They might be investing in sort of like core fundamental things. It's also been a hands-off environment from a regulatory perspective for the most part, I would say. And so I do think that one thing regulators will care about is the solvency of crypto exchanges. Just recently, Congress is now saying exchanges should segregate client assets from corporate assets.
Sure.
In the case of a liquidation or bankruptcy. That's a great step. I'd love to inform those members of Congress that we actually have the technological tools to do far more than that in terms of transparency and user guarantees, and to far exceed the legacy financial system in terms of the transparency possible.
Sure. And
the trust generation. So that, I think, is a weird thing where one day regulators will ask for it, but it's still a pretty cypherpunk thing. I mean, you're using Bitcoin in the way that it's intended. You're using cryptography to create a strong institution.
Yeah.
But yeah, it hasn't been something that people have really asked for or demanded. It might be the case that another high-profile exchange failure would catalyze it. That's one thing. The next thing I'm excited by is the possible emergence of Chaumian banks on Bitcoin.
Can you explain what that is?
Yeah, so, David Chaum created DigiCash back in the day, and that was a dollar-denominated system which was centralized. There was a central server, but it allowed these cash-like transactions through digital means with full confidentiality. So the issuer, all they knew is that, there were a number of units in circulation, but the issuer, the sort of bank, didn't know who was transacting with whom. So you had very strong privacy guarantees through this kind of cryptographic system. And there was definitely a world where that took off. I mean, I think it was meant to be bundled with a version of Windows, and they just sort of fumbled the ball on that one. But yeah, the corporation was mismanaged, but the idea was very strong. And if you're willing to accept that trade-off where there sort of maybe is more centralization and issuance, I think that can be a strong product to pair with Bitcoin's decentralized model. So you have sort of strategic re-centralization. And so one interesting project I'm tracking is Fedimint, which is a system of Chaumian banks built on Bitcoin. It's very early, but I'm excited by those things because we basically need an array of different ways to transact with Bitcoin. Not everybody's going to do on-chain, not everyone's going to do Lightning. I think the ability to create sort of Bitcoin-denominated notes that circulate with full confidentiality is really, really strong.
How do you ensure transparency of that when there's another re-centralization, as you put it?
I haven't fully looked into the details of the system yet, but I believe it's relatively transparent in terms of sort of the number of Bitcoins and who controls them. But yeah, I need to dig into the technical details a little.
But what is the specific value or problem that is trying to solve?
Confidential,
privacy,
instantaneous transactions. Yeah, because privacy, it's still a huge problem in Bitcoin.
I thought there are technical efforts trying to address that, right?
Yeah, but it may not be solvable at the base layer. I mean, in some sense, full confidentiality of the base layer trades off against auditability, and I'm on team auditability. Every confidential, ZK-ified system in the crypto industry has sort of had a covert inflation bug for the most part. So, that's a challenge. It's very hard to recover from a serious inflation bug if you have full confidentiality, right? There's a huge amount of trust involved there, and
Interesting.
We've seen typos and implementations of the original Zero Cash white paper that Zcash was built on had typos in it, and these are the best cryptographers on earth. There's like a dozen people that can understand this stuff, and that's the problem.
Yeah.
It's because it's hard to find mistakes, and so I don't trust a fully confidential base layer. So with the
So
knowledge,
you're saying you cannot trust the code quality of some of those privacy
look, it's
points,
good.
at least
It's
at
good
this
code,
stage.
but just in practice, these bugs appear, and other implementations of multi-party computation, we've seen serious show-stopping bugs there. We've seen bugs in ZK snarks, and so that scares me. We need the ability to recover from an inflation bug. It's not to say that Bitcoin has never had an inflation bug. We've had some. We've had some potential ones. More recently, we had a catastrophic one back in the day. We just need the ability to detect it in real time. And so I favor base layer transparency, and then private L2s or whatever you want to call them, on top. And I think that's the best model.
Just like Lightning.
Yeah,
there's
Lightning is
some
more private.
privacy, right?
More private, not fully, but yeah, the less data you're registering to the chain, the more private it gets. So scalability and privacy are two sides of the same coin.
Yeah.
Because Lightning omits all these intermediate payments. That's metadata that can be used. So scalability, privacy, same thing, basically.
Yeah. So steering a little bit away from the Bitcoin world, we recently had the Terra fiasco, and I know that you have talked a lot about that topic and have deep thinking around what are the key lessons learned from that, and want to share some of that with our audience.
Yeah, I wrote a little post on the plane over here called, I think, provisionally titled "Tough Lessons from the Terra Fiasco."
Okay, tell us about that.
So I wasn't a loud Terra critic. I was a quiet Terra critic, basically, because I didn't want to get in trouble with the lunatics, I guess they call themselves. So they were, incredibly vocal online. Do Kwon was really aggressive, frankly, and so I had misgivings, and I did tweet them a couple times and talked about it on my podcast. So I was certain Terra would collapse, but not because I didn't expect it to collapse so quickly, and I didn't expect it to collapse at that time. I thought it would collapse when the Anchor protocol took down the interest rate and then made a big outflow into UST, and the Luna market cap would not be able to absorb the UST outflow. So it didn't happen in the way that I thought. But yeah, I mean, it was foreseeable that it would eventually collapse. A 20% interest rate on a DeFi lending protocol, when market conditions would suggest that it should be more like 5 or 6%, is a mistake, right? Because it swelled to a huge size. Anchor was the largest DeFi lending protocol by total value lock in crypto. It was bigger than Compound, it was bigger than Aave.
Yeah.
And so that caused the system to grow unsustainably. If they'd never had that, and that was basically the only reason anyone created UST, they weren't doing anything else with it. So if they'd never had that, UST might have been in the single-digit billion range, low single-digit billions. And then at that point, the Luna market cap could have probably accommodated outflows from UST, right? Because Luna was worth 40 billion at one point. When the crisis happened, it was worth maybe 20 billion. So yeah, it's plausible that if the ratio of Luna to UST was 10 to 1, then Luna might be okay in that situation. Maybe the arbitrage cycle would work. The market cap of Luna would absorb the outflows. But the ratio became 1 to 1. And I mean, even if it was 3 to 1, you might still have a problem.
Yeah.
And so that was foreseeable. But I think more generally, like, these senior shares ideas have been tried and attempted and failed many times. Nubits, ESD, Basis never launched. Basis Cash, which was launched by apparently Do Kwon under a pseudonym.
Yeah.
We've seen these all. They've come and gone. They've never made it. None of them have
Do you think it's
succeeded.
just algo stable coins is just not going to work out, or there's a potential version of it that may work?
I mean, with the collateralization, if you want to do it with a discount, right, and have the system be chronically under-reserved, it won't work. And that's sort of an iron law that we know from monetary economics and central banking. There's a phrase out there which is no convertibility, no parity, which means if you can't convert your liability into whatever asset or unit of account it's meant to be denominating, you're not going to achieve long-term parity. And if you want to maintain a currency board, which is when you, as a nation state, peg your currency to the currency of another nation state, actually a lot of conditions have to be present. And it's not an easy thing. We've seen it fail number of times when there's a full nation state with a full, financial ammo that a nation state wields. So you'd have to believe something would be different. That sort of all of our history of central banking, all the case studies, the sort of like strong failure rate for these systems is wrong. You'd also have to believe that a crypto startup can achieve more financial clout than a large nation state.
Yeah, I think a lot of people are probably hoping that the growth of the ecosystem or the use case, other than financial use case, actually grow quick enough to overtake.
And that was
which didn't really play out, at least not until now.
But I distinctly remember the same. The theory was that there'd be a soft landing, that exogenous organic demand for UST could materialize as the anchor yields came down, as they would have to, thus meaning that there could still be a demand for UST, reservation demand, and that that would kind of support the usage of the coin. And I actually thought that was a plausible story. I thought that was the one way in which this could be sort of different from the failed algo stables, was because there was the backing of the Terra ecosystem.
Yeah.
But what this shows us is that even though you could find these logo pages with the Terra ecosystem logos, and there are like dozens and dozens and dozens of startups and protocols and this and that ended up being pretty hollow at the end of the day. I mean, there was a Terra ecosystem. I mean, it was heavily invested in by VCs. Basically every crypto VC fund invested in this stuff. That wasn't enough to support it. And I guess Anchor grew so large, it just blotted out the sun, and it became the only game.
Over financialization of the
in
the crypto space.
I mean, the subsidy was enormous. We're talking hundreds of millions of dollars a month, and so the incentive to deploy your coins in Anchor, really made that protocol disproportionate relative to the rest of the Terra ecosystem. So maybe if it had been organic and they didn't subsidize it, it could have stayed. It wouldn't have been such a dramatic collapse. Mm-hmm. But generally I feel that under-reserved stablecoins are an attempt at something which is fundamentally impossible, which is basically declaring a market price for an asset, but then not having the leverage or the tools to support that price. And so, that's not to say I'm giving up on decentralized stablecoins. I think there's a lot of ways to do it. I think the over-collateralized way is the best way. And it's possible to do it with crypto collateral. It's possible for it to be, pretty automated or fully automated. It's just you're not going to be able to. It's like a trilemma, right? You're not going to be able to get a decentralized stablecoin that's also under reserved. Yeah. I don't think
you
that's
cannot
possible.
have both. Yeah. Related to that question, because you predicted what will become of it before this happened. Is there any area currently in the crypto space where you see a bigger risk than consensus?
This was a critical risk, this one. That was probably the number one, one that you could see there would be a collapse, like a dramatic event. I am very skeptical of play to earn. As skeptical as sort of even putting it euphemistically.
Why is that?
Basically, I think there's a huge number of structures. You know how in nature there's this phenomenon where a lot of crustaceans grow to look like crabs, like crabification. We have the same thing in crypto where all these structures end up being Ponzi-like, right? So the incentive is to turn them into Ponzi's, even if they weren't initially. And so you, for some reason, this happens in crypto all the time. And so you have these Ponzi-like, because Terra wasn't a Ponzi per se, but it was Ponzi-like. So you have these Ponzi-like dynamics in a ton of different places within crypto. Play to earn or, step to earn, right? These are all extremely Ponzi-like, MLM-like structures. I don't think they will blow up, but I think the enthusiasm behind them is misplaced. I haven't seen anything in the blockchain gaming space where I think, wow, this is a great game in its own right.
Yeah.
It's always, we're going to do some financial machinations and encourage people to buy in early, and then, the late adopters bail out the early adopters, and it's the same story we've heard 1,000 times before. So, play to earn. I don't know what the metaverse is. I think it's made up. So color me skeptical there. But yeah, any of these things that are basically recreating the business model of Herbalife or Amway or LuLaRoe in a crypto context, I'm skeptical of those things.
So where are you optimistic in this space?
I think Bitcoin is still the most profound and important innovation. Thoughts haven't changed on that. Stablecoins, I think, real stablecoins are very useful.
Why stablecoin? I mean, we have Bitcoin already. Why do we still need stablecoin? Longer term, I guess.
Well, there's tax reasons why it's hard to transact with Bitcoin in places like the US, right? You incur a tax liability. Dollars are privileged. You are never taxed on your capital gain on dollars, right? So that's how they assert the privilege of the dollar. So that, there's good sort of reasons why stablecoins would be a strong medium of account.
So that's a public policy choice that you're talking about.
Yeah,
right?
and as long as that's the case, the dollar will be supreme for transactional purposes, right? So there's sort of good reasons, I would say, structurally why stablecoins will continue to matter. And also, the dollar is a unit of account that people understand and know globally. Bitcoin is a new unit of account, so it's more complex to reason about. So I think for now, as the dollar is intact, albeit at a high rate of inflation, stablecoins are going to really do well. And I think we're going to see a lot of currency failures, but the dollar is not going to be one of them. The dollar will predate on these weaker currencies through stablecoins because it's impossible to stop. You can't stop people having a mobile wallet.
Yeah.
And so I think the conjunction of Bitcoin and stablecoins is very strong.
That's interesting. What would you tell people who are new to this space, recently got into Bitcoin, now they're probably facing their first bear market? What would you tell them at this point?
If you want to be active in the space, build something of value. The market conditions are not just in crypto; they're general, right? There's financial tightness, and so, I think we need to recenter and realize that we can't just undertake nihilistic financial engineering. The industry is about building products and services that people actually need.
Yeah.
If you're not doing that, then maybe reconsider your membership in the space.
I totally agree with you. Yeah. It's a great reset to focus on what we need to build.
It is, yeah, and that's sort of what happens when interest rates rise. Liquidity conditions tighten. It's a reminder that business is about cash flows, and products development should be mindful of that. And if you're just a Bitcoin holder, there's nothing to worry about really. Avoid leverage, right? That would be my main advice, and don't overtrade. But yeah, nothing about Bitcoin has changed. The fiat system continues to sort of collapse around us. Of course, liquidity conditions worsening is going to affect risk assets and highly liquid assets like Bitcoin, gold, things like that. But ultimately, the financials haven't changed. The fundamentals haven't changed. They're still very strong. For me, I don't really worry about the price too much. It's just a matter of is Bitcoin still intact? Does it still work?
Yeah.
And that's the case for me.
That's great. Great. Thank you for coming. Thank you, Nic.
My pleasure. Thank you.